Hello, everyone. My name is Catherine. I run the VIP and institutional business globally at Binance. Today, I'm joined by a few of my fellow panelists who collectively lay the most important foundation for the crypto market, which is liquidity. Based on a recent research done around June this year by Binance Research and VIP and Institutional, we asked around institutional investors who all remain moderately confident and optimistic about the market. 64% of them intend to stay long in the crypto market. I would say staying long for the long term in crypto market obviously does not come without challenge. And today, we will dive deep into this subject. First, I would like to invite my fellow panelists to go around and introduce themselves. Stef, why don't we start with you?
Thank you. Hello, everyone. I'm Stef. I oversee our market-making relations at Keyrock. I've been in this space for the last 7 years, always worked on secondary markets. Very excited to be here with my fellow colleagues and to talk about liquidity. It's key and essential for the adoption of this asset class and this technology, especially for institutionals. So happy to participate in this panel. Thank you.
Thank you. Yes.
Hi, I'm Michael, Chief Product Officer at Skynet Trading. Actually been in the space for about 10 years now, starting out trading derivatives in my teenage years. So that's how I got started. We work mostly as a designated market maker, which means we work directly with our counterparties, which are projects. I'm very excited to be here and discuss the topic of liquidity provisioning.
Hello everyone, and thanks to Binance for inviting us. It's great to be here. My name is Martins. I'm the CEO and co-founder of Gravity Team. Gravity Team is a crypto-native market maker. We provide liquidity to exchanges, we provide liquidity to tokenized projects, and we trade something around 1% of all volume on the exchanges in crypto out there. How I got into crypto, it was 2 bull years ago. So 2017, and I was basically living in Thailand back then. My friend told me about crypto, and so basically I was my mom was coming over for a visit, and I needed to get some currency. So I used crypto as a settlement from euro to Thai baht, got 20% better exchange rate, and the Pandora's box is open.
Yeah, I always enjoy those lovely stories on how people get into crypto. And I actually am sure a lot of institutional investors are usually sitting around wondering how did those early OG encounter it, how lucky they are. So thanks for sharing. Now, Stef, let's talk about the role you guys play and how it plays into, again, laying the important foundations for institutional participation. The market is maturing. Obviously, we're at a very interesting juncture right now, a lot of changes. Can you just explain to us the long-term role that you guys play in the crypto industry, and how does that, again, play back to institutional participation?
Yeah, sure. If you think about, and especially for institutional counterparties, what's important to them is, first of all, they want to have access. Mm-hmm. Right? And access itself, although it sounds easy to many of us, and that's also one of the beauties of this industry, is that access is actually pretty straightforward. You need to have a MetaMask wallet or whatever wallet you want to use, and you can acquire crypto in some way. It isn't for the institutional side of things. That's one. And then secondly is trust. Trust in the market has a variety of aspects. It's counterparty risk, etc. But I think one of the most important things is consistency. And consistency of access and liquidity on that front is going to be key. So, and that's where a market maker comes in, right? So, consistency of liquidity is essential. Being able to acquire or being able to sell an asset at whatever time you want for whatever size you want at a fair price is key. If you don't, or if you're not able to have a market exist on that front, which is actually called an efficient market, you're not going to attract institutional, let's say, demand. So that's key, and that's what a market maker does. We're there on the buy and the sell side. If we're a dedicated market maker, we have contractual obligations to be there all the time, and as such, you create trust. Second part is access. Access can be done via a variety of ways. Exchanges is one of them. But what you're going to see more and more is direct access via market makers. So we have, for example, an OTC desk, both on spot as on options. Market makers are going to be the first point of contact very often for the bigger entities out there. in close collaboration with exchanges, because that's where liquidity is. So if you as a market maker don't position yourself from a technological perspective and from a regulatory perspective in a way that is not answering to all of these questions, it's going to be hard for institutions to be attracted, and that's the role that a market maker plays.
Yeah, I completely agree there. For my part, just to add on there, working as a designated market maker, we indeed provide access to a lot of parties to these tokens and projects, which is very important, I think, because some of our clients trade on over 50 venues. Some of these venues may definitely not be accessible to every market participant. We, of course, as a trading firm, have built the integrations and have built the systems to operate on each and every one of these exchanges. That's centralized, but also decentralized, where also a lot of the value lies nowadays, which is also in turn more difficult for a less sophisticated or somebody new into the market to actually access. So I think market access from my side of things is definitely one of the more important roles of a market maker.
And just now, I remember we were chatting in the backstage, and Stef, you mentioned that you guys are essentially at the front line of, the first line of defense in the industry as well. How do you guys assess the reliability and security of all this emerging new project? Again, obviously from a very different perspective from the usual institutional investor who are probably looking for a long game. But again, you guys are massively exposed. So if you guys can just share a little bit on your approach, the experience there, that would be great.
Yeah, it's work in progress. if there would be a roadmap or a blueprint for that, it would be great. Please send it my way. As you mentioned, we are exposed. Why? Because we're interacting with custodians, we're interacting with exchanges, we're interacting with brokers, banks, and typically we're power users of them. We're active on-chain, so you need to be able to have all your infrastructure adapted to whatever trading infrastructure there is, wallets, management, etc. So yes, it's tricky. So the way that we do this is with as much due diligence as possible from a technical perspective, which is a human-based, business. It is knowledge. It is ever evolving as well. So it's keeping up to date. It's training. It's keeping, hiring the talent out there. And it's also co-building together with regulators the amount of setups, or at least the guidelines on that front, to be able to guarantee for the future, solid setups that protect ourselves as well from counterparties, from whatever, technological challenges that might arise from new innovators. So I think that's the way we approach it. But I love to learn also. You're a power. You trade on a wide variety of exchanges, so you're actually maybe the best one to answer that question as well.
Yeah, absolutely. I think these days every market maker has to assign a number to their counterparty. Usually for us it's somewhere between like 3 and 20, which is basically the probability of default for the counterparty, and that's something that we really need to acknowledge and play into, and we use a lot of different metrics to understand the risks of our counterparties. There's some in-house work that we do, trying to understand the team, trying to understand the on-chain parameters, but also looking at things like fiat gateways, because banks also do due diligence on our partners, and if banks can, and oftentimes they do very sophisticated due diligence, and having strong fiat gateways is an indicator of strong financials as well. But I think what's happening in general is that there's this self-regulatory movement taking place where maybe like there's a lot of regulators around in the world, right? But there will always be offshore entities, and there will always be the rest regulated environment, and market makers want to participate there as well. But the way they then work there is that there's this self-regulation aspect coming in, where exchanges are basically kind of having their requirements from projects. Projects are having their requirements from market makers. Market makers are having their requirements from exchanges, and or lenders are having their requirements from market makers as well. And back in 2020, when we were requesting a loan from loan originators, we could virtually, present our financial statement on a piece of napkin, and we would get an uncollateralized loan, right? That was really the reality, and now all of those loan originators are long gone. Let's not wake up the dead. So that was the past, and obviously people have learned their lessons, and every player has learned their lessons that we need to keep each other accountable, and I think together that's actually happening, and Binance is coming up with like Merkle proofs, and there's a lot of examples like that. There's really a variety of tools out there how we can manage risk and how to open ourselves for transparent communication.
That's a great example, right? You essentially touch upon an ever-changing regulatory environment. What about technology? How does that change your decision making when it comes to, again, assessing risk and again your decision making process?
Right, yeah. I think there the co-building, as Stef mentioned, is also something that really enters into it. I mean, we've seen quite a few blockchains launched by now, for example. So we know what's necessary on each of these blockchains to trade there effectively. That also means that if a newer party that still has to launch approaches us, we can become a partner of theirs, right? We can help them shape the infrastructure and the tools that they need. We know the service providers in the industry, which means we can introduce them and help them get the best practices set up. So on the technology front, I think it is mostly the market helping itself, basically, and thereby, bringing the whole industry further, basically.
Brilliant. I think that's precisely what keeps us all in this industry. It's just so exciting, and the ever, development of new technology available. But then again, with the role that you play in the market, how do you manage to make sure you stay ahead in identifying a very strong emergent market, but at the same time striking that balance, right? There is small cap project, middle cap, and then large cap. What are the different approach, if any of you can share? And again, this ties back to how many of the institutions, especially if they are still, assessing and observing, I believe this will help them very much in understanding, how to make their way into the market. Martin?
Yeah, there's many ways how you can assess markets or projects or services that someone provides as a market maker. Or you can look at liquidity, you can look at volume or other metrics of a project or of exchange. But what we have found historically is that there's a lot of noise there. Like, this data is not always correct. There's a million of different ways how a project can fake their volume and how exchange can do the similar things. So what we try to derive to is what is actually the essence, what is the source of where would this traction and adoption would come from, which is, essentially, it's basically the people. In one word, I would call it community. What do I mean with that? So we can take, for example, Turkey as an example. So Turkey actually has quite strong demographics. It's one of the largest countries in Europe with 80+ million people. Yet at the same time, it also has a currency which has a particular characteristics that kind of create a lot of need for people to actually want to search for alternative investments where they can store their wealth and where they can actually not lose money from inflation. And that's basically, according to my definition, a community that has a very strong need for certain services. And out of that, then we can search out for possible new markets that would be interesting to target for us as a market maker. And then, you come out with a conclusion that Turkey is actually a place that really needs crypto adoption, that is looking out for services much more than let's say Western Europe per se. So it's kind of this. We try to really follow the people instead of follow the data which oftentimes can be manipulated. And I think the same also applies for institutional investors when they are thinking about where to allocate their assets in long term and what will really bring returns for them in the future.
Would you like to add something?
For us, it's tech first in how to choose it. The role of a market maker is becoming so holistic. You need to offer a wide suite of services when it comes to liquidity that it's an investment that you need to make. Human resources-wise, human capital-wise as well, tech-wise. So the way we look at it is tech first. We are tech companies. On-chain has become an option for institutional participants. I mean, not only because of the quality of the layer 1, layer 2s out there, but also the developers and the builders on top of it. Derivative markets on-chain are a possibility. 4 years ago, that wasn't the case. So if you choose who to work with, it starts with the tech and the vision first, and then it starts with, okay, what's your current traction about? Because in this market, in all honesty, it's very hard to gauge traction, right? A lot of work has been done on vanity metrics, which is not relevant. You need to think about tech first, and that's how we choose, actually. And it doesn't really matter if you're big or small on that front. I mean, the reason why we build out our companies in such a way that we can, service independent of size. It's how exciting is your tech, what is your vision, why are you in crypto, and how can we help?
Michael?
Yeah, I agree there. How can we help? I also think it's important to distinguish. It's not necessarily about small, medium, or large caps. Although in some way this correlates to the type of projects or blockchains that are built, right? Typically a layer 1 or the base layer will have a larger market cap if that's what you're talking about. But the risks associated with these different types of projects, so if it's a layer 1, if it's a bridge, if it's an AMM or a protocol on top of a layer 1, they all have different risks, right? A layer 1 might have validator risk and smart contract risk, while a protocol building on top of a layer 1 might only have smart contract risk or risk involved with the people that operate or build that protocol. So I'd say it's more about looking at what kind of product or what kind of protocol it is than it is at looking at market caps or market sizes, because those can change rapidly, right? We've all seen the huge price increases. That's not what we're looking at. It's more about what kind of projects is it, and that's what you should be looking at, I think, if you're looking at security, but also the tech that you're working with.
Understood. Very fair. And just help us out a little bit. Again, you guys are all active traders, in terms of your role in the ecosystem. How does your work cater to, again, which is active trading in this context? How does it help, again, many of the institutional investors who are perhaps looking for more medium to long-term investment? How does it tie back? Is this something that you can share, Michael?
Right, yeah, of course. I think Stef already touched upon it a little bit. What we facilitate is essentially efficient markets. So that means we provide orders in the order books, whether it's on or off chain. We arbitrage away any inefficiencies in the market. So that means that if prices are different on one of the venues, we try to find a fair value and try to quote our orders around that price. And that makes it so that anybody that wants to trade is able to trade. Right? And that's in the end
simple but difficult.
Right. It is very, very simple if you speak it out like that. The actual process of getting there is really difficult because it entails integrating with hundreds of APIs of different platforms. It means building your security setup in such a way that it is not accessible from the outside. It means working with different service providers to make sure that you have all the best practices in-house to make sure, well, you are able to provide that service. Yeah.
So let's talk about the challenge, right? We are obviously at a juncture. The market is maturing, but there are a lot of uncertainty out there. From your perspective, how are all these variable pieces? What are the challenges that you believe us as an industry collective are facing, or in your respective role, or in the context of an institutional investor? It's open, but it's closed end. Because love to hear your view on the challenges ahead.
Yeah. You made a funny example there all of a sudden where you could get a loan on a napkin. I'm very happy that those days are over. They're over for a reason as well. Very good. But the world between 2020 and now is different, and not just per se crypto, but also how people look at yields and how they value capital. You've got the risk-free rate, depending on which jurisdiction you want to take a counterparty to. But that's something to definitely keep in mind. And today, the search for capital efficiencies is very hard in digital assets. The concept prime brokerage was the topic of many speeches in the conferences over the years, but actually it doesn't exist yet. It's a great word. It would be amazing, but it isn't there. All of the lending desks, the institutional lending desks that give you the capacity to have capital efficiencies are dried up or not interested, given the markets and the yields that they are requiring. And as such, you need to have a significant balance sheet in order to be an active participant in this space as a market maker. We are very capital intensive, businesses, and as such, that is going to be a challenge. The second one is both being an opportunity, right, because it gives clarity, but it's going to be a challenge in the short to midterm, and that is regulatory clarity, right? It's the third time we speak about regulation. Regulation, that word, I mean, many like it, some don't. It's been often used at conferences, but I'm going to do it anyways. There is a lot of advancement being made on regulation, which is great, right? Now, we are active in a global market, and we are a power user, and we give access. We are the broker-dealers of the world, and as such, regulatory clarity is going to fragment the market. You're going to have people that are moving. You're going to have people that are going to be only active in specific jurisdictions. You're going to have to adapt yourself with your team and your legal infrastructure to be able to service them, and it's expensive, which means that the entry to market for other market makers is bigger. Maybe it's good for us, but it's also going to be tougher for us. But that being said, though, whenever there's going to be a global standard on that front, which is going to be years ahead of us, it's going to be amazing. It's going to be great. So we have to go through that, let's say, valley of opportunities. It's going to take some time, and we're going to have to be patient, and we're going to have to work as much as we can of the longevity of our business model. But whenever we get there, it's going to be awesome.
Anything you guys would like to add? Michael?
Yeah, I completely agree. Just to quickly add on to Stef, I think one of the challenges that is going to help in terms of regulation is actually the self-regulation that companies like exchanges, like Binance, for example, has been doing in terms of transparency. That's going to hopefully set the stage for regulations that make sense. So regulations that support the space and not so much inhibit it, as it sometimes has been. So I think that's definitely a challenge, but also an opportunity for the market to basically regulate itself, which has been in other industries somewhat successful, and hopefully it will be here as well. Other challenges that I can see is definitely the need to basically make access of different blockchains more user-friendly. So for us as an institutional party and an actor that trades on a lot of venues, it is relatively okay and doable. But from what I hear around in the circles that we walk in, is that it's very difficult to actually operate on different blockchains. For example, if you talk about the on-chain aspect, right? How do you get assets from A to B? Is that safe? Am I taking a risk here? Yes, of course you're taking a risk, but that risk can be minimized, and I think that's a very big challenge of the industry at large over the next couple of years, because if anybody, and institutions in particular, are going to commit their capital to anything on-chain, it has to be in a way that they feel safe. And bridging assets between blockchains is definitely an area where a lot of improvement can be made. And thereby would present a huge opportunity for the market to actually solve that problem.
Yeah, interoperability is a age-long question, but such key for, again, really creating a friendly, I guess, environment tool for an institutional investor. Martin?
Yeah, just to continue on what Stef already started regarding regulations, I think definitely we can see it as a challenge and as something that complicates our lives. But at the same time, I think there can be good regulation as well. And like when life gives you lemons, you just make lemonade. And I think there's many. It's tough to fit into an existing regulation, and we can see it in the United States with the securities laws and how crypto is trying to fit into it, and it's really complex for this industry to fit into a bit of an old narrative, and that can create issues. However, if there's an open dialogue with regulators and if we are creating regulation from the scratch and really trying to understand the technology, what are the benefits of it and what are the risks of it at the same time, then there's a lot of value that can be added. And I think there's quite a lot of good things that we can, for example, even as market makers see in, or investors to see in MiCA regulation that's coming out. That's really kind of protecting the investor relationships. And yeah, from our side as well, we are having an open dialogue with the regulators back where we're from in Latvia. So we are actually really talking to the government and educating them about what are the needs of the business and how are they looking to protect the rights of the consumers, and using the benefit of having a very small country that can move forward quickly and create well, the perfect environment and perfect conditions for businesses from all around the world actually to come establish themselves in jurisdiction of Latvia and to have direct access to the whole European Union market. So I think, yeah, there's challenges, but there's opportunities ahead as well.
All right, last but not the least, let's keep it short. At the risk of hearing regulatory unclarity again, I would love to invite my fellow panelists to really each share one of the key event, in your opinion, that everybody in crypto industry, especially institutional investors, should watch, and what are the potential impact for them. I'm going to make Martin go first, so you can think about what not to say.
I'm going to say it anyways.
So what we are excited for in the future?
No. The one key event to watch in the coming year,
oh, yeah.
and what's the implication for institutional investors?
Yeah, so I think 2024 is full of quite a few exciting events. So, well, I'll just name I'll just name for one the Bitcoin Happening. You know, it's a great festival. Takes place every 4 years. And everyone's really optimistic, and the sentiment is positive. So I'm really looking forward to that.
Well, you had it easy, Michael.
Right. Well, since we already spoke a bit about MiCA, I'll skip that one and discuss the one that we haven't discussed so far, which is the ETF. It's obviously going to be a major event. Whether it's going to happen or not, we don't know, of course. But anybody thinking about moving into the space should, of course, be aware of it.
Yep, and a instrument that is, again, well accepted and well known by, familiarized by the traditional investor is just make it that much easier for general investor to
If we
access.
talk about market access, which we did, right, an ETF for some institutional parties is definitely the only way that they're ever going to get exposure. So yeah, it's definitely going to be important.
All right. Well, coming back to you, Stef, no pressure.
No, the pendulum of activity and adoption has been shifting over the years to Asia and Middle East, thanks to also the US being a bit too stringent maybe on some places when it comes to adoption of this technology. I think the pendulum will shift back, and it will shift back hard. And that doesn't mean it's going to be activity anywhere else, but it's just going to shift back. There's too much capital, too much talent in that region of the world, and it might be the elections, it might be the ETF. I don't know what it's going to be, but it's going to shift back, and it's going to be shifting back hard. And I think that's going to be an interesting one to look at too, and then see what happens. Right.
Well, thank you everyone for joining us for the panel today. Obviously, we are at a very, very interesting time. So stay hopeful, and let's see where this takes us. Thank you very much.